All right, so for this challenge, I decided to go with leveled up traders. All right, and the reason why is because I usually go with Funder Pro. I definitely trust Funder Pro, and I actually am currently doing a 50K challenge with Funder Pro. But I like the rules a lot more on leveled up. And let me explain why. Because what I'm going to do is a one phase, one step 200K challenge. Now, the difference between Funder Pro and leveled up is the consistency rule, whereas the consistency rule on Funder Pro is 15%, but the consistency rule on leveled up is 45%. What does that mean? That just means that since the profit target is 28,000, let me zoom in a tad bit. Since the profit target is 28,000, aka 14%, the consistency rule is just saying I can only make 45% of the profit target within a given day. So since I can only make 45% of 28,000, I believe that comes out to like $12,000 or something. Let me do the math really quick. $28,000 times 45%. That comes out to about $12,600, aka meaning that I could, in the perfect world, right? In the perfect world, I could potentially pass the challenge within 3 days if I were to just take off like that. But, I'm going to take a completely different approach, and I will explain my approach with the challenge later on. But first thing first, let me go ahead and purchase this challenge, which is going to be a whopping $1,099. Pray for me. All right, and as you can see, we now have our funded challenge account, our one phase challenge account. Now let's talk about how I plan to strategically attack this account, starting with risk management. Now for the risk management, I'm going to go with a conservative, aggressive, conservative approach. And what I mean by that is that I am going to keep it very small risk so that we can build up some cushion, starting off with only 0.5% risk per trade until we get to the 5% mark, targeting a 1 to 2 risk to reward per trade or higher. So once we get to the 5% mark, that's when I'm going to go a little bit more aggressive, perhaps trading 1 to 2% per trade until we get to about the 10% mark. And then we are going to turn the dial back down to a conservative approach. And I know what you're thinking. Why not just keep going aggressive? I'm sure many of you have experienced this, including myself, many times when taking a funded challenge, is that the closer you get to passing, the more your brain starts, you start to get excited. You start to maybe see trades that aren't necessarily the best, and you may just spiral and lose all of your profits. And that is something I've done before multiple times. And just being completely transparent, that's just something I don't want to do anymore. So once we hit that 10% mark and we only need to gain 4 more percent, why not just dial the risk back down to 0.5%? So even if we do go on a pretty bad losing streak, which is inevitable, that we can easily recover, we can easily make it back the losses once we do get into a groove, once the market is favorable to us. And it's just for me psychologically, it'll work out a lot better. That's just the plan that I came up with. Maybe as time goes on and we develop more, and we get deeper into this whole thing, maybe the risk management plan changes. But for the most part, I just want to start off very conservative, and then we're going to move into an aggressive mode to get that little push, and then just dial it down. Then once we are funded, I also did pay for an extra percentage profit split. So instead of an 80-20 profit split, it'll be a 90-10 profit split. So once we get to that point, I mean, making 1% of $200,000 is 2,000 bucks, and 90% of that goes to me. So slow and steady wins the race. It's a marathon, bro. It's not a sprint. It's a marathon. So with that being said, we have 10 minutes until market open. Let's go ahead and get to some pre-market analysis. All right, so there was a very huge move in the pre-market, but first thing first, as always, let's go ahead and check the news. And as we can see, that there is no news at all whatsoever for today, Monday, April 28th. But let's go ahead and change this from today to this week, apply this setting, and just see what this week is looking like when it comes to news. So we do have some high impact news tomorrow. Jolt's job opening. Wednesday we got NFP, scary day, probably not gonna change. We got CPI on Wednesday. Did I say Wednesday twice? Tuesday we got the Jolt's job openings. Wednesday we have NFP, GDP, literally CPI. Is Wednesday is going to be a crazy day. Thursday we got unemployment claims, ISM manufacturing. Friday, so we got a lot of things going on. Unemployment rates this week is probably going to be very hectic. And what I am not going to do is trade market open. And I know there's a lot of traders out there that absolutely love trading market open. As of lately, I haven't been touching the markets until 9 a.m. Central Standard Time, just to give the market some time to develop and go ahead and move what is, how it's going to move. And then once things calm down, that's when I hop in and look for a better setup. Now, pulling up order flow, let's go ahead and take a look at this. As we can see, we have the value high, which has already been broken. This is all going to move at 8:30, so I'm not really going to take this into account. I'm more so going to take into account the previous day's volume high. What is this? Hold on. Okay. So I'm more so going to take into account Friday's volume high and VPOC when it comes to ES, aka S&P 500. Um, just gonna look to see what happens now that we're breaking above this level. I'm going to anticipate that there will be some form of a pullback. I believe I'm pretty sure the volume high is going to move up above here. The VPOC is probably going to move as well. I'm sure the volume low is perhaps going to stay the same once the market opens, but we're just going to have to wait to see what happens. But if price continues to push up, then I'm simply just going to wait for a pullback to the volume high VPOC area for S&P and see if we, respect that zone. I can go ahead and mark that up right here. Somewhere in between this zone is where I will look to take my entries, area of interest, um, and go from there. If price were to make a steeper pullback, I wouldn't be surprised back to the POC where people, where the big traders are probably going to want to accumulate more orders. So if price does come back down into this area, then I will be a lot more cautious, but we can see a bounce off of the POC back to the upside. Since the market is trending up, then my bias is up. Go with the flow, go with the market. Don't make it harder than it has to be. Now, looking at gold up here at the top, if we slide this down a little bit, same thing. We can see that we have a volume high up here. Price is currently bouncing off of the POC for today, but like I said, upon market open, the POC volume point of control is perhaps going to move, most likely. But we also have the Friday's POC as well in between. So we can kind of anticipate this as being some level of support and or resistance depending on what happens upon market open. But this is going to be a key area that I am looking at. So we could perhaps see a bounce play, a double bottom, where price comes back down into this area, accumulate some more orders, and then we could take it back up to the volume high. We could take it up to today's volume high or even Friday's volume high, whatever the case may be. We're just going to go by ear. But like I said, I'm only shooting for 1 to 2 risk to rewards. Once I hit 1 to 2 risk to reward, I move my stops in profit to that 1 to 2 mark. And if price just so happens to come back and take me out at 1 to 2, then it's a W day. If we could capture more profits, then we just capture more profits, an even more W day. Regardless, that's how we're going to approach the market today. So for gold, I am looking to go long, perhaps up until these levels up here. Perhaps into these levels up here. I'm going to see what happens because this has held as resistance both here and here. So I'm going to be very, very cautious in that area. But I can't see price also going up there because we do have what we like to call a gap in fair value where a lot of transactions just wasn't conducted. So that usually acts as a magnet for price to push up into. So that's gonna be how I attack the markets. I'm looking to go long on both S&P and gold. until the market shows me otherwise. All right, so I'm liking this setup on S&P 500 right here. Just want to be a little bit cautious. We did bounce off of the POC, as we can see right here. We had a huge push all the way back down to the volume point of control, which we are now starting to push up from. So it's looking like we could potentially take a long here. Now, I did kind of hesitate on the entry, so I would like to see price perhaps maybe come back down into this area again, but we may not get that. I don't think we're going to get that. So I'm just going to go ahead and set this up really quick. 0.5 risk. We're going for 1% win. Stops below. And I'm just going to go ahead and get in on this right now. And we are in our first trade on this account. Let's see how it goes. I was super late on the entry, and a lot of volume kicked in within 5 minutes. So I'll probably be all right with a 1-to-1 on this trade if we can get there. But so let's go ahead and mark that off, see if we can get that 1-to-1 right here. That's the level. Just gonna see how price reacts around that range and take it from there if we can get that far. All right, so we're about 10 minutes into the trade, so I just want to go over a few things that I'm seeing right here on the order flow. Right now, we are consolidating right here, which I'm not a big fan of, but I'm going to let the trade play out. We are getting mixed accumulative deltas on that entry candle. We did get a pretty huge accumulative delta. And then the very next candle, we got a negative delta. Then the next candle after that, we did have some delta divergence where we had a positive delta on a bearish candle. So I'm just paying attention to the orders, seeing if we're getting stacked imbalances in our favor or against us. And, just trying not to get spooked out of this trade because we did have a pretty good rejection off of the POC. I want to see it go potentially back up to the volume high or even higher than that, where I will look to close my trade. But just some things I did like in this candle, we did close above the POC of the candle. Whereas in this bearish candle, we kind of closed within the POC. Not absolutely horrible, but usually if the candle closes above the POC, that just shows a lot more bullish power than bearish power. But yeah, just taking this all in, paying very close attention, and like I said, just not getting spooked out of this trade. Gold absolutely blasted away. Right at 9 o'clock, I missed that entry off of the POC as well. Life would be absolutely amazing if we would have caught that trade, but here we are dealing with the S&P. But yeah, so there's just a few things that I'm noticing, looking to see if we're getting stacked imbalances in our favor, aka like green imbalances on the right side hitting the ask versus sellers hitting the bid. I'm gonna see how price reacts if price can get back up to this volume high. I'm gonna see how price reacts there, see if it just pushes straight through, or if it struggles. If it does struggle, then I will probably just close the trade there. That'll be around the 1-to-1 range. But yeah, so there's that. You see, sometimes you just got to go to the bathroom and then everything works in your favor, right? Right? I really hate my entry on this. That's one thing I'm going to jot down in my journal, is that I absolutely hated my entry on this. I kind of FOMO'd into this position, expecting a lot more volume to kick in. You win some, you lose some. Had I got in where I really wanted to get in, we'll probably be up. We'll already be up 1-2 right now. Another pro tip, I mean, it works for me. It may be different for you, but another pro tip is to trade in silence, bro. Don't try your best not to trade with like music or anything like that, because it could be very distracting. I've noticed that I trade a lot better with like just silence and just me talking myself through the trades that I take. It's not looking too good on this one. Do have a high volume node right here. See if buyers step in right here. Price don't defend right here, then if buyers don't defend this area right here, then the trade is probably cooked. Not looking too good. I think it's GG's. Imagine a reversal right here. Do you have a huge buyer just step in this high volume node that could bless us? Yeah, price rejected heavy off of that high volume node. See, that's what we should have waited for, and that should have been our entry. But let's just see. Let's see if we got saved. Price gets back up to break even. I'm definitely gonna secure or just mitigate risk. Take off half. We are officially back to essentially break even our entry point. So let's take off half of this risk. Markets are being weird. It is a Monday. Just gonna mitigate risk. Gonna mitigate risk, and I'm only gonna go for a 1-to-1 on this trade since it is Monday. I like the rejection off of that high volume node. A lot of buyers stepping in. A lot of green side volume stepping in. Cumulative delta was pretty huge on this previous candle, 5-minute candle, and we're getting some stacked imbalances on the ask, which is also a pretty good sign. So I'm gonna hold the trade. I'm not gonna close at break even. I'm gonna hold the trade, let it play out, but I am gonna mitigate risk just because of how choppy the markets are. The price was so close to my stop. That's crazy. I lost my phone. I had a phone. And we are out for the day. Yeah. Weird day, bro. Weird day. I don't think there's enough. There's not enough volume to push it up, bro. Like it's rejecting very heavy. Rejecting very, very heavy. We could potentially see a move to the downside, honestly. But I'm no longer interested in these markets. Too choppy, not enough volume. Gold was the move. We missed gold. Have absolutely no idea what's going on with S&P right now. Don't want to be a part of it. So that's gonna wrap up day one of trading. $500 L, 0.25%. Nothing crazy. I will see you all tomorrow for the next video. Peace.